Welcome to the Deep Dive. Today, we're going to be diving into the world of specialty chemicals with Aether Industries' latest financial report. You're interested in the building blocks of, well, everything, right?
Right.
And Aether's making moves in pharmaceuticals, agriculture, even oil and gas. So we're going to break down their recent performance. We'll look at revenue, we'll look at debt, all that, and really explore what it means for their future.
Yeah, it's a complex picture, but these numbers really tell a story, and I think we can see their ambition to really establish themselves as a global player, but also the challenges that they're up against, in a competitive market.
Okay, let's unpack this. First off, how'd they do on the top line? Their revenue's up year on year, but down compared to last quarter.
Yes.
So what's the deal?
Yeah, so they reported 2,098 million in consolidated revenue for Q2 FY25. Now, that's a tiny, like 1% increase year on year, which on its own might seem a little underwhelming, but when you actually look at their standalone revenue, which focuses on their core operations, it tells a very different story, a much healthier 17% jump year on year.
So the consolidated figure is a bit muddled because of these big expansion projects they've got going on.
Exactly, yeah. Sites 3, Math 4, and 5, these are all in various stages of development, and those investments require, well, a lot of cash up front. And this brings us to another key point, expenses.
Let's talk about those. It's not surprising that expenses are up given these expansion projects, but what are we talking about here in terms of the actual numbers?
So if you're looking at the consolidated figures, their total expenses for Q2 FY25 were 1,485 million, a jump from 1,411 million in Q2 FY24. And standalone expenses also show a similar increase.
So revenue's up slightly, but expenses are climbing even faster. How does that impact their gross profit?
That's the million-dollar question, right? And this is where it gets kind of interesting. So while they did see that slight year-on-year increase in revenue, their gross profit actually decreased a bit. Consolidated gross profit was at 613 million for Q2 FY25, down from 665 million in Q2 FY24, and the standalone figures are basically the same story.
Okay, so shrinking gross profit, never ideal, but what about their gross margins?
Yeah, so margins are also feeling the pressure. Aether reported a consolidated gross margin of about 29% for Q2 FY25, meaning that for every rupee of revenue, they kept 29 pays as gross profit. That's after you take out the direct costs of making their products, obviously. Last year, that number was 31%, so there's definitely some squeezing going on there.
Costs are eating into their profits. For someone listening who's, maybe new to all this, why should they care about shrinking margins?
Well, it's really a sign of efficiency, or in this case, it can be like, a bit of a red flag. Shrinking margins, especially if they keep, going down, can mean a company's losing pricing power, or maybe they're struggling with rising input costs, or, facing some other kind of operational challenge.
That makes a lot of sense. So while these big expansion plans are exciting, it's clear that they're definitely putting a strain on Aether's profitability in the short term.
Absolutely, but this is just the beginning. To get the full picture, we'll need to go deeper, look at their operating income, their net income, their cash flow, but more on that after the break.
That sounds like a story for part 2. Don't go anywhere, folks, because we are just getting started. Welcome back to the Deep Dive. We are knee-deep in Aether Industries' financial report, and things are about to get even more interesting. Right before the break, we were talking revenue, expenses, and we saw that their gross profit margins are feeling a bit squeezed.
Yeah.
So let's keep digging. What's the story with their operating income and margins this quarter?
Right, so just like their gross profit, Aether's operating income also saw a little bit of a dip this quarter. They reported a consolidated operating income, or EBIT, of 505 million for Q2 FY25. Last year, same period, it was 515 million.
But,
And their standalone figures show, basically the same, that kind of downward trend.
okay, so another metric showing a little bit of a decline. What about their operating margins?
Yeah, so no surprises here. Their operating margins are basically, mirroring that trend that we're seeing with their gross margins. Their consolidated operating margin for Q2 FY25 came in at around 24%, down just slightly from 25% last year. The standalone operating margin's actually holding up a tiny bit better, but still down year over year.
Right, so it seems like those rising expenses from these expansion projects are kind of casting a shadow on their profitability kind of across the board.
Yeah, exactly. And this leads us to, a really important question. What does all this mean for Aether's bottom line?
Let's talk net income.
All right. Looking at the consolidated figures again, Aether reported a net income of 348 million for Q2 FY25. That's down from 367 million in Q2 of the previous year. And their standalone net income, again, kind of tells a similar story. Just a small decrease compared to the same quarter last year.
So even with that slight increase in revenue, their actual profit is down.
Yeah.
Now, you mentioned earlier that Aether is putting a lot of money, like a lot of money, into expanding their operations.
Yeah.
How's their cash flow situation looking? Because you know what they say, cash flow is king.
Cash flow is king, absolutely crucial, especially for a company in a growth phase like Aether. And this is where things get really interesting, I think.
Hmm.
So their cash flow statement shows that while their operations generated 689 million in the first half of this fiscal year, they used 1,318 million for investing activities.
Wow, that's more than double. So they're really burning through cash to fuel those big, ambitious expansion plans.
Exactly. And as a result, their cash and cash equivalents have decreased. They ended the period at 5,081 million. Now, that's still, a decent cash cushion, but it is something to keep an eye on in the coming quarters.
It's like they're making a big bet on their future.
Yeah.
And speaking of bets, those investments, they don't come cheap. How are Aether's debt levels looking?
Yeah, another really crucial piece of the puzzle here, and it's definitely something, a lot of investors are asking about. As of September 30, 2024, Aether's total borrowings, that includes both their short-term and long-term debt, stood at 1,686 million. That's a pretty significant jump from 12,292 million at the end of the last fiscal year.
So their debt is growing right alongside those shiny new facilities.
Yeah.
Is this a cause for concern? Should investors be hitting the panic button?
Not necessarily. I mean, taking on debt to fund growth is a very common practice. It's not inherently good or bad. The real key is whether Aether can generate, enough returns from these investments to comfortably service that debt and then eventually, pay it down.
So it's a calculated risk. And speaking of risks, Aether is placing a lot of faith in research and development. They're pouring a significant chunk of their revenue into it.
Ah.
Let's delve into that and their overall guidance for the future when we come back for the thrilling conclusion of Aether's financial saga.
Yeah.
And we're back with the deep dive, still wading through the financials of Aether Industries. Before we went to the break, we were talking about their ambitious expansion plans, their cash flow, and that debt they're taking on.
Yeah, definitely some big moves. To understand their strategy, better, we should look at a couple of key ratios that can tell us about their financial health.
Okay.
One is the debt-to-equity ratio. For Aether, that was at 0.81 as of September 30, 2024.
Okay, and for those of us who, don't have finance degrees, what does that actually tell us?
It basically tells you how much debt they're using compared to their equity to finance their assets. So a ratio over 1 means they're using more debt than equity.
Hmm.
In this case, 0.81 means they are using debt, but not, a crazy amount.
Okay, so little leverage to fuel that growth. But how comfortably can they manage those debt levels?
That's where another ratio comes in the interest coverage ratio. Aether's was about 5.48 for the first half of this fiscal year.
And what did that tell us?
It basically tells you how easily they can pay off the interest on their debt using their earnings. A higher ratio is better, generally. Something over 1.5 is usually considered healthy. So Aether, with 5.48, suggests they're doing okay with meeting their interest obligations, at least for now.
So not feeling the heat from those interest payments just yet. That's good.
Huh.
But what about the bigger picture? What kind of guidance have they given about the future?
The big question. They haven't actually given specific financial forecasts, but their actions are saying a lot, I think. That heavy investment in R&D, which was a significant 7.69% of their revenue in the first half of fiscal year 25, shows that they're really focused on innovation, long-term growth.
They are not resting on their laurels, that's for sure. And it's clear that they're really looking ahead, particularly towards those more sustainable solutions. We talked before about their contract with Sequence Group to produce those natural bio-based products.
Right, and that partnership's a really smart move. Demand for bio-based products is only going up, and Aether is setting themselves up to really be a leader in that market as it grows.
It's like they're anticipating what that next big wave in the chemical industry is going to be.
Exactly. It's tough to tell exactly what their market share is, with the kind of specialized products they have. But this expansion and that focus on always innovating, it suggests they want a bigger piece of that global specialty chemicals pie, for sure.
Big ambitions. They're not alone in this race, though, right? Who else is out there? Who are they up against?
That's the thing with Aether. Because they have such a diverse range of products and such a specific niche focus, it's hard to say who their direct competitors really are. They're not going head-to-head with one big giant. They're kind of carving out their own space. And I think that agility plus those strategic partnerships they make That's a big advantage for them.
Yeah, like that mega deal with Baker Hughes.
Yeah.
That was a power move.
For sure. That gives them access to new markets, plus just more credibility overall in that energy sector. It's a sign that they are playing the long game here. They want to be a global force in specialty
It's
chemicals.
like a chess game,
Yeah.
moving into position. So, to wrap things up for our listeners today, we've covered a lot. What are the key takeaways about Ether Industries?
Well, Aether Industries is a company at a turning point, I'd say. They are really betting big on innovation, on being a major player in markets that already exist and those that are just emerging. Their success is going to depend on whether they can turn those big moves, those big bets, into solid rewards.
It's a high risk, high reward kind of play. And speaking of risks, we talked about their debt levels. How should our listeners understand that piece of the puzzle?
It's about balance, you know? They're using debt to do what they need to do to fuel that expansion and that R&D. What you as an investor, someone interested in Aether, want to look at is whether those investments will actually create enough return, enough profit to handle that debt in the long run. Pay attention to things like that debt to equity ratio we talked about and the interest coverage ratio. Those are good indicators.
Yeah, those ratios are like their financial vital signs as they go through this, exciting but definitely challenging phase. Ether Industries, shaking things up, pushing the boundaries of chemistry. Thanks for diving deep with us today. Be sure to join us next time as we explore another fascinating topic.